Hello everyone, I'm Rob Smith, the In the Black VTF here, T3 Live with today's market wrap-up. And if we take a look at things here, obviously SPY closed up very nicely, however, within a giant range. But, if you're on the long side, you'll take what you can take. A good portion of that came right at the final push here. If you look at the 5-minuter, this last push, 193.50. Look at that, 20 handles off of the fiver here, coming all the way back up. But what you want to do is keep everything in perspective. We're starting a new month. And if we take a look at the monthly chart here, here's one of the reasons you're getting, some up, things go up, things go down, is that basically it's going to have a tough time taking out the monthly highs or the monthly lows. Granted, we got a lot of month left, and anything could happen, but for right now, we're in the middle of that. And so when you have a big whoosh like we did here, you need some sort of consolidation, and that starts on a very short-term time frame. But right now, SPY would still be an inside week. We got a couple days to go, but we got to take out that, or we got to take out that. Otherwise, we're going inside week. And so, anytime you have an inside week or an inside bar in any time frame, you can expect these reverses back and forth because we're consolidating. It's like, okay, not strong enough to take that out, hit them, come down here, not strong enough to follow through, and then bring them back up like they did. And so, if you go here, you'll see still have to take that out or that out, which was yesterday's lows. Otherwise, we should continue to consolidate. But the good part is this range is really big, and that's why we're getting these nice moves. Even normally something would be really boring at this point isn't because of these moves. So if we take a look at the shorter term stuff on the 60, you can see this business in here. Here's a spike down last week, and then this consolidation here, and then the gap up, and then this consolidation here, then a consolidation right in the middle. And so for today, we try and take that out a little bit higher. You got a gap to fill up into there, but then you got to go all the way up through here and take all that out, or if we start dropping back in, down in there. So we can take it case by case basis. The good thing about once things consolidate is that we have more notable natural buyers and sellers, sector by sector, stock by stock, whereas last week everything was completely thrown around by the futures. That's going to subside. Granted, still that effect is still in effect, but as we started to see some things like crude oil here, based on the USO here. Remember, I was trying to go weekly. It was weekly bullish engulfing and trying to come off the bottom here. And so that's still engulfing for the week so long as it's over 1502, which it slightly is here. So we had an inside day yesterday. Took it to the downside, and if it was really going to fail, could have stayed down there, but that's not what happened. It came back up, opens and closes back in that inside range. So the potential is this reversal strategy, which is an inside bar equilibrium, and that's negated by a hammer. So we can look out to see tomorrow if we can take out 1532 in the USO, and you can look at the crude, and you can look at all the proxies. But one of the reasons that works is because we know that there's going to be stops always on highs. People tend to do that. So there's going to be stops there, there's going to be stops here, and there's going to be stops there. So you have the potential of the bam right there, especially if natural buyers come involved. So we can take a look at the stocks and break it down. You can see Noble Energy here completely underperforming, not having any part of this so far, and however, still building that inside week. And you can look at ExxonMobil, also an inside week, but an inside day here to see if this is goes to the slight higher, comes down here, and we're forming these ranges. These ranges are going to be really important, especially in USO, because the first things first, they're dumping every oil stock in the business during this decline and seemingly buying everything in those 3 days here. However, once this fails to make some highs, it's going to be tough to go all the way out and take out the lows, at least immediately. And then you can start to form a range, and that range is going to give a good idea on what companies are going to be damaged longer term and on their earnings, because initially you'd say, well, oil's going down, they're all going to lose money. Yeah, let's dump all the stocks. However, once we can find a range and see if that can retake a higher part of that range or lower, then you can evaluate on a fundamental basis anyway, what companies can survive at certain ranges in oil prices. That's going to be interesting going forward. Also, during this decline, we're waiting for the transports to rally. Didn't happen. As a matter of fact, they got cracked. However, now, even though oil is recovering, that, like I said, we're looking for that lower level range. Where is it? And at this point, could still be very low, and so that should be good for the transports, and it came through today for the airlines. You can see this American Airlines going up here, consolidation measured, move towards that. You can see the Delta coming up near these recent highs. Alaska Air, which we know has been an outperformer for a long time, JetBlue. there. So we'll be continually watching the trannies as the oil consolidates as well, especially the guys that use all the oil. And that's going to be like FedEx. FedEx, nothing so far. So we want to see if FedEx can come out of this range, much like the airlines. You can look at UPS here, still holding lower, but we'll see how that goes. And Norfolk Southern was an inside day and barely moved, and we know that they're negatively affected by some of that crude oil stuff. Another thing you can look at here, something like Buffalo Wild Wings, barely affected by the sell-off. And so this thing's near spitting distance of going to new highs, and so it's certainly watching how it gets out of there. Another group that was interesting is semiconductors today. Outside of the end of the day, spent the entire day in the opening 60-minute range, and then just broke out at the end. So we'll see if that can pick up any steam. Looking at all the pieces, parts of the puzzle on follow-throughs, and so you can look at something like SWKS here. Goes inside day to watch how this breaks out. Can this take another shot up in this stuff here? We'll watch that inside day there. Another thing that's going on here is if you look at the XLU. And so the good thing is that although Dow theory wants things to confirm, that the trannies and the Dow Jones itself can confirm itself while the utilities have a period of backing off because you risk on or risk off. And right now, the trannies showing that they don't need any yield and certainly acting weak. So we'll keep an eye on that stuff too. Other than that, certainly watching the VIX products as they've really launched here in UVXY and VXX. Big down day for UVXY, so the question is, have we seen the move? Was that it? And it's a full retracement because we know that these things eventually will. Certainly going to keep an eye on that, and certainly a level to keep an eye on here is going to be the opening of the week to get it read on all time frames, and it opened at 64.56, and it's getting a lot closer to there. And then over time, you know that this is going to unwind. But while we're in this consolidation, hopefully that's usually bad for these things, so we can look to short them. We can look to the SVXY. But every day's a new day here while we're consolidating until we can break out of that range, albeit a big range. So keep watching those pieces, parts. That's going to do it for today. All right, I'm Rob Smith in the Black VTF here at T3 Live with today's market wrap-up.